Hi guys, this is Nikki Yu, also known as Taste Trader, and you're watching the Awesome10X Global Market Update. So we're gonna navigate the bottomless pit. Actually, today we're gonna try to discuss in the inner circle class how to navigate the bottomless pit. I'll give you a preview of what's gonna happen. So we already saw about 60 to 70% flash sales go in the market. And I think the most important question that people have is how long do these 60 to 70% flash sales go? Is it gonna continue going down after a 70% drop, or will it actually get some bargain hunting? I'm looking per se to Ehang because Ehang is the cheapest eVTOL right now. Although the revenues might seem for others actually nosebleed, I'd say that it's really part of the game because when you're investing early on in a sector, you normally get a 90% drop or an 80% drop from its peak as the market is going to digest how much do these valuations have to be. So I'm taking a look at some companies. Let me just show to you a few names that I'm taking a look at. So Ehang has fallen 5% down to $22.80 last night. This is already dropping 83% ever since Ehang has fallen. So the first drop of Ehang was related to potential fraud. There was people who were talking about a potential fraud in Ehang sales, which we actually thought was not true. But nonetheless, we know that because it has rallied from $10 to $130 or a 30x move, that most of the goodness of Ehang is going to be priced in. Ever since then, though, I would assume that after 3 months, how low can Ehang go? I just checked that, let's say it really makes a full reset at $22, it could continually falling down perhaps to $14, somewhere at the realm of about December 2020. So I don't know if it's going to go to 10, but I am of the view that at 22 or I will probably $20, I'm okay with it. The pictures actually show that Ehang last 2 days ago had actually this is actually the actual I should actually translate this to English. Let's see, simplified, translate this to English. Okay, so this is an interview of the CEO of Ehang, Hu Huazi, implementing a 100-lane air traffic plan for Uber in the air. So Ehang Intelligent is a pure eVTOL, electric vertical takeoff landing. They already announced a strategic adjustment to focus on the product development for logistics, short, medium, and long voyages related to their transportation operations. They are currently implementing the 100 routes plan, which means that they're going to open 100 UAM routes within a year. Ehang CEO Hu Huazi said in an exclusive interview with Leiti.com founder Lei Tianping, Ehang will be committed to become the world's leading provider of intelligent air transport services. So in China, they're already very massive when it comes to drone delivery. And so I believe that eVTOL's best application will not just be will be first evident in China, where cashless payments have been rampant. And in China, they've already done robo-taxis with Baidu. So between China and US, I'd say that eVTOL as a commercialization effort is going to be first in China. And I think that Ehang is the very one that will be adequately positioned in that secular trend. Take note that I'm a venture capitalist when I approach my investor, so my investing, and even if it fails, I don't really mind. So I'm more on I'm really asset allocation per se. So it's pretty much in line in how I implement my Awesome10X investing style. They're producing 250 Ehang 216 aircraft within the year. That's a huge jump from last year's 79 sales. So that's about times 4. Times 3, 80 times 3, 240. This is already going to be paid for, given that they have already clients covering 8 countries, 40 cities in Asia, Europe, North America. For those who aren't aware, they already have Alibaba as a partner, and also Tencent invested in Ehang. And they're also partnered with UPS. So they have really good partnerships. If you try to check all the claims of the short fraud, it doesn't really matter. All of them were actually negated and nullified if you only just read the Ehang results. So I think that the 80% slide is more of an opportunity. Have I done this already? The answer is yes. A long time ago, when Farfetch was being scrutinized about their acquisition of Off-White, there was this drop of about 75% from $30. Farfetch actually traded as low as $7, and at $7, $8, I was really one of the I was buying somewhere 7, 8, 9. So I was really willing to buy these 80% drops, provided that I really like the fundamentals. Farfetch is my prior buying on an 80% slide, and I could see something happening here in Ehang, which presents to me more of an opportunity. Another opportunity that I am not afraid to share to you guys is Affirm Holdings. So last night, actually, this fell to a new low, breaking that $65 and actually falling down to about 57. It could fall about 65% in my view, back to about $50, or even at 45. So from the recent peak of 79, if I estimate a perhaps 40% slide, it could drop to about $45 or $50. So I'm estimating to buy there. The reason, of course, for the Affirm slide is the Peloton refunds on Tread Plus debts. So you are already aware that Peloton has shared that actually since a couple of weeks ago, there was already news that Peloton, there was a death, right, of a child, and it's very harmful, the Tread Plus, to children who aren't that safe when they think about it, or even pets. So the US already ordered a refund for all the Peloton Tread Plus. And of course, that explains this huge, massive slide for Peloton's shares from about 99 to 82. I'd say that Peloton would continue to fall down. Any rallies to 100 will continually be selling down. John Foley already explained that they would refund for everyone who wanted to basically sell their Tread Plus, and people would of course react negatively on that news. How bad does bad news actually affect a stock? Let's take a look at some companies that had a bad news before. One significant bad news was the E. coli incident on Chipotle. Notice that from about $700, it fell as low as about $200 here, or $250 over a year. So about 2 years time. So it was a 70% slide, 2015 till about 2018. So I'd argue that Peloton would slide at least in the next 6 months. And so if you are assuming in the next 6 months or even a year that this was the top 120, it could fall further about another 50%. So 120 perhaps to 70. And if you're estimating a drop of 82 to 70, how much more can this fall? Another 15% in the short term, and perhaps in the next 6 months, more consequently, if this is going to be a normal 70% slide, it would be about $40. I look at it more as an opportunity, guys, because I know that John Foley is going to be able to fix this Tread Plus problem and the safety issues within the next 6 to 12 months. So within the next 12 months, say 2022, let's assume that today is January or May 2022, I think that the bottom is somewhere here. So around that time, I'd wait. That would be about 4 quarters from now. So I don't have Peloton, but the impact of the Peloton is actually affecting Affirm. For those who aren't aware, Peloton and Affirm work hand in hand, especially for the buy now, pay later. So some people are assuming that Affirm's major client is Peloton, and it will actually considerably slide. But I don't really see that, because if you study Affirm is actually heavily geared with Expedia and Shopify, and even weddings and reopening efforts. That's the reason why Affirm has been growing 100% from their earnings release. So it's actually more of a reopening play. Take note that Affirm IPO was actually started at $45. And so I think that this is going to be coming back to the IPO price of $45. So there will be a strong support, in my view, at $45 should this continue to escalate downwards. If the continuous drop of Peloton will affect Affirm on the downside, I'd say that the drops would just be limited to another 20% down. So if you're willing to buy $57 all the way to about 20 to 45, I'll be willing there. So assuming you want to just enter low, just post your buy at about 45 or 50. I think this one is a good entry to navigate a bottomless pit. Some things that I want to share. The life path close to you. You were born here and you had a life path. This is your life today. You continually have more future paths that you will encounter and do in your life. Stocks would plunge around the world. This happened in the past. crash. This was March 2020, financial crisis, recession, falling stocks, rising anxiety. Most people in the world react to headlines like these with the thinking that, oh, I should stay away from the market. But you should actually do the opposite. You want to buy in a panic, you want to exit in euphoria. For those people who are happily making so much money in cryptocurrencies, you want to be exiting or selling partially in that euphoria. And I want to understand and explain to everyone that the guru of mantra of investing is to actually buy when everyone is really selling. And so, of course, it's easier said than done. Most people actually do not invest for more than 4 years. They don't have a prudent long-term strategy. It's usually short-term thinking and market timing. And you could see that most people do not deploy cash in bearish markets, which actually hurts their returns in the long term. You'll notice that from 2009 to 2013, when the Sensex, this was the Indian stock exchange, when it was just consolidating, nobody was actually investing. When it started rising to about 100,000, to 30,000, this is 20,000, this is 30,000, that's when a majority of funds flown in. A lot of funds go in when it's uptrend, not when it's actually consolidating. And so if you're downtrodden and wary, I want you to be, number one, do not be disheartened. Nearly all Awesome 10X baggers have let me down in significant, unforgettable ways. But the job is not to lose heart, stay the course, and really continue investing in great companies. And the volatility, especially the 60-80% drops of high growth names, are worth owning about. I'm talking about 60 to 80% drops from its high peak. So given that I did sell some peaks, I don't really have a 60% drop. I do have a 20% down on my stocks, but I don't really mind for it to fall further 20%. A lot of people are nervous about the market, but I want you to understand that people will also move their idle cash off the sidelines. There's records of $1.5 trillion as of November 2020, sourced from Fred. And this is something that you have to allocate in your conservative portfolio. More than getting your timing right, Awesome 10X recommends concentrate on the right asset allocation. We talked about the pizza pie rule. So some people have 8 parts. It could be short-term investments, long-term investments, how much is cash, how much is crypto, how much, if ever, or how much is real estate, how much should they allocate for their job, their daily needs, their businesses, or real estate, and whatsoever. It could be an 8-piece pie, or it could be as simple as, well, how much cash, how much short-term, how much long-term. So that's a sampler. Or how much is my stocks, how much is my real estate, how much is my cash. Some people do the 25-25-25-25 rule. I usually teach them the 25% guidelines. You put 25% of your monthly in cash, 25% in stocks, 25% in a potential real estate house eventually someday. So that could be your Zillow, your potential real estate in the future that you will buy, your Zillow stock to pay for your Zillow real estate home eventually. And then, of course, the other 25% is your business, your job, which should pay for your daily needs. Avoid making ad hoc investments that would ruin your financial long-term plans. So that I'm thinking actually for the next I'm just thinking out loud. A firm I'd like to buy it at 50, Zillow at 100, Ehang at 20, Agora at 40, RC at 9, maybe Copen at about 7 below. Let's say people will gap down and sell it down. 6.8, maybe Xpeng, I'll buy at 25, SunPower 20, Nano Dimension at 6, NVIDIA at 525. Doyu at 8, Unity at 80, Palantir at 19. You'll notice that these companies, some of them I already own, so I'm just really averaging it downwards. So I have, let's say, RC at 13. I'm willing to buy more at 9. I actually sold some of my Agora when it rallied to about 56 to 60. So I'm just looking to buy it $40 if I have an entry point yet again. So there's a lot of things to actually uncover. If you notice that the top 100 websites, the most valuable brands, usually it's the same stocks over and over again, the same companies, top 100 results, YouTube, Google, Netflix. These are what people go to in their websites. They use Spotify. So, I sold some Spotify at 350. I'm actually looking to get in at about $200 or 220 or 230. I'm still thinking what price I enter. I do have some cash on the side that I would eventually deploy in the stock market. I wanted you to see that before pandemic, these are the companies that people flock into during the pandemic, almost the same companies that people flock into. And so there are companies that you would really hold on and never sell, or rather, even if you sold and you got it discounted, you want to actually be looking to buy back at the same price or cheaper, 50% lower price. So a lot of people should understand that a majority of companies actually already control all of the brands when it comes to chocolates, when it comes to beverages. People know about Coca-Cola, PepsiCo. When it comes to your snacks and whatever cereals it's got, or chocolates, it's always Kellogg's, Mars. Whenever it comes to your toothpaste, your detergents, your soaps, it's always about Procter and Gamble, Unilever, and you name it. Next year, think about things that are happening, opportunities that's in my in front of my eyes. The opportunities, given that Chipotle fell 70 to 37, I do want to get Peloton at $40 if that ever happens. I don't think that's the case. I would be I'd say that at 45 and 50, I'll be willing to buy that for this month. Looking at some drops, Unity actually had a bad number here. That's why there was this sell off below 140. I think a 50% drop to about $70 is a full reset. Current price is 92. I already have it. I was this consolidation. I was willing to buy $95. Should it fall down further, I'm seeing 85 or 70. I don't have any problems with these companies, so I'm willing to actually average all the way down, even if it has to go $70. Spotify, so I sold some levels at about 350. I haven't gone back in. Some people saw 240 as a support, 240 to 300. Looks like it's trading range in this level. If this pulls back further and we actually navigate a bottomless pit 20% lower, I think the most maximum Spotify drops about $200. So between 240 to 200, I find 20% downside quite okay for me to handle. So volatility, I'm willing to handle that. For SunPower, it's $23 right now. Let's say it does go down 20% lower at $20 or 19. This one is I'm willing to buy. So I can see that in the last 15 years, SunPower actually had a tumultuous really cyclical in the last 10 years. But I'd say that the next 10 years isn't going to be cyclical, as it's very clear to me that we will have SunPower residential panels for most Americans. 50% of Americans would all have a new home, and that new home would be powered with a solar panel installed by SunPower. So I'm very critical what I buy with my next 10 years. So I really have no problem. If I'm willing to buy at 27, I'm more than willing to buy at 20, even as low as 15. So I'm really more of a cost averaging person. So you don't mind me. I'm willing to do that. I'll show to you a few things I'm doing in my Etoro account. I did some cryptocurrency, actually about $10,000 in the last 3 to 4 days, just to short term trade it. So I bought and sold some Neo and Cardano, and then I'm actually taking some profits off the side. So from $10,000, it's now to 2.5. That means 7,500. I already sold with a profit. What did I do with that? That's of course to cushion my downside. That's why my equity is just neutral, because I'm using that gain to actually buy and average some companies like SunPower. You'll notice that I had SunPower as high as $32. After averaging, it's now $25. It's actually one of my large positions right now. I do have a large position in Zillow. I really like the real estate firm. Had a look on the earnings. Think that it's actually a good company to get into. So in my summary, I'm actually for Zillow, I think that it could fall to about $100 or $90. But with homes being built in the United States, just take a look at the decades. In the last 10 years, from 2010 to 2019, there's only 5.8 million houses built. And in 2000 to 2009, prior to that, it's about 27 million. So what Zillow has been experiencing is actually the great reshuffling and really a lot of pent-up demand. So the net income of Zillow Zillow is a function of U.S. housing boom, and I'm willing to bet that this is really something that's going to be secular. So this actually the homes and that's being bought and sold for Zillow. I really believe that in my long-term portfolio that Zillow is a part of that, so I don't mind. So these are actually my large bets. I'm willing to bet on the U.S. housing boom, and the U.S. housing boom will actually benefit Zillow. I'm also betting on the solar. I could choose SunPower or Sunrun, or but I just chose SunPower. But Sunrun actually is also okay. I had Sunrun before. I just sold it when it was high. I sold it when it was actually near the peak. I think I got to sell at about 85. It was peaking at 100. I got to sell somewhere at 80 plus. So right now it's actually 50% lower here about $40. I used to buy this here at $40. I could buy it actually 40 all the way to 25. It's just that I don't know if it's gonna go 25. But either I buy SunPower or Sunrun. It's just that as you could see in my Etoro account, I already bought SunPower. So it's SunPower that I've been averaging in. So SunPower is large, Zillow is large for me. Zillow, how low can it go? Maybe $100. So I'm willing to actually tolerate any drops to actually average down on it. For JD and XPeng, I am also bullish on that. How low can JD and XPeng go? For JD, actually, I think the lowest it can go is about $60 or $70. Reason being, it's really already a blue chip. JD and Alibaba usually drops 30 to 40%. I took a look at all the e-commerce names that are already established. For JD and Alibaba, I think if I buy at 75, the lowest it can go is about 70 or even maybe maximum $60. So I don't think that I could actually get JD at $50 anymore. Or if it does happen, I'm more than willing to actually just hold and buy it all the way. So just telling you my plans. I'm planning to actually average on Nano Dimension in case it goes down to 6. Nano Dimension is more of a venture capitalist style. So I do have venture capitalist style. This is 3D printing. This is a sector that people aren't really happy about because they're not happy because they're not confident in additive manufacturing. So you could see that this used to drop 90% in 2019, $22 all the way to 1, rallies to 17. I bought some at $2 before. I sold early, actually as high as about 5 or 4 or 6 I sold. So I'm willing to actually buy this 6. Let's say it does go down to $2. I really have no problem. I know that Nano Dimension has a great company inside. They're acquiring great companies with their $1.5 billion cash raised. So these are really carefully done picks. Nano Dimension, XPeng 25 or 20, doesn't matter. I'll be cost averaging it all the way down. When I buy a company, in case you don't know, if I buy it at 30 all the way to $20, if I have to cost average, I have no problem because it's really fundamentally betted. I didn't choose it because of a stock chart. So Nano Dimension XPeng, I'm willing to do that. I'll trade ADA and I'll trade Cardano and NEO just to actually offset any drops in my stock portfolio. Meanwhile, I do have some Baidu. I did try. These are very small positions. I'll tell you my small positions. I have small positions starting to buy Nvidia 588 all the way to 500. I'll be willing to average that down. Alibaba 228 all the way to 160 if I have to. GSAT, well, this one is going to be a trade on my end. I just think the GSAT can go 140 or 130. Actually, it already hit 130. I just didn't sell. I bought this before at 90 cents. So I think it's currently going to be a trading range for GSAT. There will be a trading range from 80 cents to $1.60. So at near 140 to 160, sell calls there. And then current level is just really consolidating. If it goes down below 1, you sell puts and get strikes. So I do sell put, sell call on these types. With Etoro, since I couldn't do that, I just trade it the way buy low, sell high type of thing. So I'm just showing you the companies that I'm willing to buy and hold. Nvidia, Alibaba, GSAT, Shopify, some Douyu here at $8 seems very tempting because I believe in esports. Ehang, eVTOLs, Palantir, I'm looking to buy more if it goes down to 19. So I'm really looking to just cost average these names. Beyond Meat can actually fall $100. Doesn't matter whatever the earnings will be. The reason that the market will make it fall has nothing to do with earnings, because Zillow already had great numbers, but the market just continually sold it off. Why am I looking at $100? This one, 90 to $100. This was where their prior support was. I've been trading in and out and really long term on Beyond Meat in my thinking. I think in the next 10 years, we will really be hinting on many alternative meats, not just Beyond Meat, but also Mitzi. So as it goes up and down in the next 3 years, because it's still early phase, I'm willing to actually buy, sell, buy, sell. But I'm always continuously long-term secular in Beyond Meat. So let's say bad earnings, it goes down to $90. I really like it because even in 2020 or 2019, 90 or 75, I'm willing to tolerate buying Beyond Meat because all of the partnerships with Dunkin' Donuts, Starbucks, Alibaba, the Chinese factory, the Shanghai factory there for Beyond Pork, the KFC partnership. Actually, I love Ethan Brown as a CEO. That's why I'm willing to do this. So Beyond Meat, if it goes down $100 or $90, I'll be more than willing to average that down. Sundial, I started a small position. This is cannabis. They actually acquired last night another company for so let me just read to you the Sundial acquisition. So they were buying Inner Spirit in cash and stock deal. I like it that they're using their billions of dollars to actually to use that for expanding. So I like companies that are expanding and acquiring as long as they buy it in a small amount. So Nano Dimension and Sundial are acquisition expansion plays for me. I like this sector, so I have that. Sundial, Baidu, Robotaxi. So whenever people ask me what my positions are, I think that they should know that I buy knowing the secular trends. Definitely for Nvidia, I believe in the artificial intelligence. Alibaba, it's more on the cloud computing, the value. I see these two stocks actually hitting 300% within the next 3 years. Quite a predictable reason why, because of cloud computing, e-commerce, just sheer domination. So you'll see me you'll see me buy $300 of Nvidia and Alibaba as it falls down 10 to 20% lower in the next coming days. So if this one is down 20%, or if Alibaba goes down 20%, I'll be buying these two names. So basically, I just like Nvidia, Alibaba, Global Star, Shopify, Douyu, Ehang, Palantir, Beyond Meat, Sundial, Baidu, JDX, Pang, Nano Dimension, Zillow, SunPower, Neo, and Cardano. I'm just trading that. So there. So I'm trading these two names. All right. Let me see your questions. Hi, Harley. Kamusta? I know that the market is a little bit tough right now, but I think we're really able to navigate this. So chillax lang, everybody. So hope that you're fine. Hope everybody's fine. For anyone who's actually wondering how low the drawdowns have to be, actually, ano yan, easy. Everything is easy in practice, no? To buy when nobody likes it. Sundial is down 80% already. That's why I'm willing to buy 78 cents. So I'm actually willing. Well, I teach people to do sell calls and sell puts. But let's say you just simply do a buy low, buy 80 cents, just like what we were doing before, buy 40 cents on dial. I think at these levels, okay na to eh. So we don't know the bottom, but as long as we are conditioned to buy with a ample margin of room for error, I'm willing to buy positions, even if the entire market is really leaving. No, so yun. So yun, thanks everybody. Yung
Sabi ko lang kanina baba daw po kayo.
okay, sige. All right, that's it. Thank you very much. Just continue to invest, guys. Just always continue to invest and stay to your investing plan of long-term investing. Thank you. Bye-bye. Lots of opportunities to buy.